and we're going to get some very interesting views from my trading warrior brother, Peter Goodburn. Peter, always great to welcome you back to Face. How long have we been talking and batting the
Um,
ball around
I'm in
now?
about 10 seconds, actually.
All right, that's it. Very good. You know what? That's how you
Well,
could tell you have a connection with someone when you could not see them for long periods of time, and that you pick it up right where you left it.
that was the
Right.
previous 10 seconds.
Yeah, that's right. So great to have you here. Wish you and your family great holidays and the euphoria. It's interesting. I've seen things like put call ratios at extremes, but yet things like the greedometer not showing excessive greed. Um, I believe that you were looking for this in the Nasdaq, that a lot of things had not completed, and the S&P still has not made a new high with successive higher highs in Nasdaq. Can the S&Ps just clean out stops on Fed Day and trade over 61? What do you
Yeah,
think, Peter?
I think we're going to have a look at it. I can bring up the S&P actually. Let's have a quick look, see what we can expect. I think today with the Fed coming in, I'm generally expecting a kick higher.
Okay.
Um, I've had a bit of a tweaking problem because we've gone from December to March on the rollover earlier this week, and
Okay.
it's distorted the continuation charts a little bit. Normally I revert back to the cash charts to do that, but I've left it where it is for the moment. But I think a good illustration of that is shown in this relatively short-term chart of the S&P. It's the background chart is 420 minutes. The inset on the bottom right is just a 60-minute chart of the December contract. But just to elaborate the gap, you can see it on the
That's
continuation
the
chart in the
rollover.
background. That's
That's a
the
rollover.
rollover. Yeah,
Okay.
yeah, it's gapped
Okay.
up, and we had a target prior to that, basis the internal measurements up to about 61.27 and a half, and we got to 61.11, and then we declined
Okay.
in 5 ways. If you look at the inset chart, you can see the 5-way decline here,
Yeah.
traded down to 60.39. Some nice fib price ratios there because the fifth wave measures the 61.8 proportion to the net declining ways 1 to 3, so that's good in verifying that as a 5-wave pattern. Then we got a 3-wave rally, very deep one, back up to 61.02, but then we've had a 3-wave structure down to 60.40 last night, and it's obviously held the support and bouncing up. So we think that this is a short-term flat pattern. The December contract gets up to about 61.02 and a half, and the equivalent March contract will get to 61.69 and 3/4, which is the same level which I'm pointing to on the December here at 61.02 and a half. So I
Okay. So
think that
it's
we'll
not a new high. It's not a new high.
technically not, no.
Uh-huh.
I don't think it will break into new high. Um,
If it
and
does, it won't confirm because
yeah,
it's moved sideways. We'll have some non-confirmations.
yeah, I mean, this 5-wave decline from 61.11 down to 60.39 3/4 um, it's quite clear what that is, really. I mean, I'd be surprised if we made a new high.
Yeah.
Saying that, the only way that it could do that is if that 5-wave pattern was some form of the ending part of an expanding flat pattern. But it doesn't
Okay.
really show up visibly anyway. I don't think we will. I think we'll get a push up. Now, a reason for that also is corroborated by the fact that if you take a look at the Nasdaq, um, we've had fits and starts with the Nasdaq. A lot of the hedge funds started selling out
Yeah.
in late October through November, and then it suddenly got its heels back and
Oh,
started to rally again and started to
it's been the
outperform a little bit.
star. Yeah, a
Yeah.
little bit. A
Well,
little
yeah,
bit.
quite a lot.
Yeah.
Yeah, quite a
Yeah.
lot. And here you can see the recovery from mid-November's low up. And
Yeah.
again, you got a bit of distortion with the gap up from the rollover from December to
Okay.
March. But in actual fact, we're still within quite clear parameters of this topping out. I've got a target here at 22,564, and I've actually broken down a 5-wave substructure in this move up from the November low. on a couple of degrees of trend. I can show one of them at this level because it's somewhat visible. If we look at this 5-wave advance, if I extend 1 to 3 within the subdivision of this swing up from November, you can see what I've just done. I've extended waves 1 to 3 by 61.8. You can see it hits that number.
Yeah. What are we,
And
100 points away?
yeah, about that. And if we go back to the original sort of July August sell-off, which is wave A of this expanding flat, if we extend that by 38%, you can see the two numbers crossing over each other. And we call that a bid price ratio convergence metric. So 2 or more overlapping like that will give you pretty stiff resistance. So I think that we're going to get a push up after the Fed announcement. That would take the Nasdaq to modest higher highs, but we won't get that on the S&P. It will technically get close to it but fail.
So I wanted to ask you, one of my styles, and it's Forrest Gump, is I look for relative strength and weakness. And after the Nvidia earnings, they cleaned out all the shorts, and I started shorting Nvidia. And I thought that we were going to have a breakdown under 132, which it took it out, but now we're back above it. But I think the highs are in, don't you? I mean, some things have already topped, um, even though the Nasdaq hasn't. We have housing stocks that have been under pressure. We have the XLI that's been under pressure. So there are some cracks in the market. Breadth, I think we had a period, Peter, of 11 days of the market being up with negative breadth.
Yeah,
So,
yeah, no, absolutely. I mean, if you look at the SOX semiconductors, they've remained below the July highs. Things like Microsoft are below the July highs. There's certainly cracks appearing. I've always maintained that this orthodox top in July for Nvidia was the top of this 5-wave advance that dates back to 1081. If you look at the bottom left hand, can you see this screen okay?
Yeah, got it. Yeah.
And you can see the 5-wave advance with the subdivision of the 5th wave from this October 23 low from 39.23. That's also pretty clean and tidy with fib price ratios coming into those numbers. And I think that the following decline, the correction, is an expanding flat, but that would mean that we label, like the S&P and the Nasdaq, this recovery from the August low as either a single or a double zigzag up to 152.89. Now, I was speaking to my colleagues because we have morning meetings every morning where we sort of we have a WaveTrack think tank where we go through different setups. And like you just said on Nvidia, the decline ordinarily from 152.89 seems a perfect setup for wave C to begin to the downside. But we noticed there was a bit of a problem when we looked at the very short-term picture because, and this is one of our worksheets, we can see that actually the decline fits a perfect double zigzag pattern, which is inconsistent with an impulse wave decline for wave C beginning. And so we've been scratching our heads a little bit about this. And you can see that the measurements are pretty good because if you measure the first zigzag decline and we get an elongation with a C wave there, which is, again, a bit confusing because, 9 times out of 10, that will end up as a 3rd wave, but there was never a 4th and a 5th to augment a 5-wave decline from the high, unfortunately. So, but you can see that if you measure that first zigzag and as 100% value and subtract from the X wave rally, which is basically this, I put X in there.
So does this imply it's an ABC and there's another high coming?
Well, that could be the implication because, this is dropped down now to those measured numbers last night and it's starting to recover. Now, if that happens, what happens then to the larger picture? Well, the only thing that sort of seems obvious to us at the moment, actually, I might have it here, is that it could unfold. Oh, I thought I'd put this in, but no, I haven't. It could unfold as a double zigzag. So instead of a single zigzag from 90.69 finishing at 152.89, we go through a double zigzag. Oh, I thought I measured it, but I remember the measurements coming to about, hang on a sec. I won't guess, I'll just measure them up. I think we have to extend this by 38%. I just want to make sure I can get that on. So that would take us all the way up to 186.
Wow.
And
Okay.
that, yeah. So I don't know whether that's going to happen or not. I'm
Yeah.
still thinking about this because you're catching me sort of an hour after our meeting ended, and I haven't had
Okay.
really time to ingest a lot of the implications to that. But
Okay.
the problem with that, of course, is the fact that the Nasdaq itself looks very top heavy, and I'm not endorsing this idea. It's just something that we talked about in our morning meeting,
Okay.
and we haven't really
Yeah.
come up with an absolute conclusion of it yet.
Okay, buddy. I appreciate that transparency. It's an I don't know. And it's wisdom to say I don't know and just wait until you see it. I think I'm going to stay with it.
Yeah, I think,
Um,
I mean, generally speaking, what's confusing today or looks asymmetrically awkward today can often clear up the next day.
yeah.
Something we tend not to rush things because ultimately things do clarify. The mist does eventually clear, and you get a perfect trade the next time, and that's where your leverage comes in. So yeah, I think we'll just keep these aspects in mind, but it's just a bit of a warning that we were prior to this really quite bearish, but this pattern looks a bit strange. Maybe we're reading too much into it. I'll tell you one thing it could be, which is very scary, is a fractal series of 1-2s. So you could actually have this as waves 1 and 2 up here, and this is waves 1 and 2. I've put the wrong text in there, sorry. 2. And this could be wave 1 and 2 as well.
Because
And
it's trading about 33 something this morning. It's
33, 133,
yeah,
yeah.
yeah,
In the pre-market. Yeah, I mean,
yeah,
okay, that's consistent with both ideas here.
yeah.
Obviously, if we got a three-wave rally from last night's low and it ended below this secondary low here at 140.11, then you could say, well, then it could collapse. It could just collapse lower. So
Okay. Well,
anyway, so
enough
that's
about my personal stuff. I thank you very much for that advantage that I have. But um, you know, why don't we take a look at the dollar and the metals and the miners? Were you disappointed with the performance in the miners, Peter?
well, I was looking at Vale earlier this morning. Um, wasn't particularly distressed by it. I mean, basically, Vale, though, is coming into some interesting downside targets that we've had down here. We could extend those. We've done a very modest 38% extension down here. The one thing that's very visible, this is Vale basically traded in New York. But if you take a look at the Vale picture traded in the Bovespa, um, this upswing from 213 up to 23, its
Wow.
equivalent
Yeah.
pattern, it looks a little more like a zigzag, which could imply that that's wave 1 of an ending diagonal. And if it were, Vale could drop quite a bit lower and even break below this low. And we're quite aware of those possibilities. If you measure up this to BHP, um, we've still got more downside there. And
Well, you don't consider, do you consider BHP like a pure gold play? Or aren't they, a lot of copper and stuff too?
copper, really.
Yeah.
Yeah,
Okay.
copper.
All
Um,
right.
don't forget BHP. They've been pushing to try to buy Anglo, mainly because of their
Yeah.
copper resources. It's a bit of a yeah. It's really a copper play.
Okay.
And I think looking at this chart, I don't know where wave we can put wave B at the moment. It might be that it's just done an expanding flat there, and wave C is dropping down now. Probably more likely like that. But we've still got get down here, and the thing with copper prices, which we updated in our monthly Elliott Wave Commodities um, uh, outlook report last month, is that copper still has a lot of downside, and we're getting confirmation of the downside because we've just completed a short-term 5-wave picture
Yeah.
down here from a corrective rally that began in November. But this is really bearish. And I don't like copper at all. I think we're seeing the whole aspect of China still unwind. I know we've got stimulus measures in China, but they're not really sort of stimulating domestic supply and consumption.
Okay.
Retail sales were up a bit in China, but I don't think that we're really going to move the needle of any significance in China to the upside
Right.
until basically the property market has a clean out. And the property market's dropped, about 8 to 9% so far in prices from the
Yeah.
peak. You need a lot more down than that to wash out before you
Yeah.
get.
They're another 20 or 30.
Well,
Yeah.
ideally, yeah,
Yeah.
ideally, if you
I
could.
wanted to ask you because it's interesting. I know you're looking for an important low in Aussie, and
Mm,
what you're showing in copper
mm,
and what you're saying about China would normally not bode well for, or maybe that's what you need to put in a low. It's almost like you can't talk anyone into really wanting to be long euro based on the
mm.
news backdrop. And, Aussie, pretty closely associated with China and copper.
Yeah, well, until you put an analog on the charts and then you take a look at the ASX, for example, versus,
Oh,
what
okay.
and versus maybe the currency itself, and then the correlation tends to break down. I mean, we've been looking this morning at some correlations between, for example, 10-year Treasury yields and the dollar, and there's a very
And,
strong correlation. And then
yeah.
I was speaking to a client earlier this morning as well from Brazil, and we were looking at the correlation between Bovespa and the latest breakup in the dollar against the Brazilian reais.
Huh.
And the
Yeah.
thing is that you think that there might be a positive correlation, but there actually isn't between those currency between the reais and the Bovespa. There's actually a negative correlation. And
Interesting.
if you take a look at we've just triggered alternate counts in the reais because we have actually broken up, and we've got targets now going up. Look at this. This is incredible. We're
Yeah.
getting a massive sell-off in the
Blowout.
race, and it's probably going to go up to 7
Yeah.
before this
Yeah.
tops out. This is a
Okay.
monthly chart, so that's pretty long term, but gives you an
And,
idea.
and and that's a stronger dollar. That's a dollar going up towards. I think you have targets around 109.
Yeah, that's right. If we look at the dollar index, yeah, about I thought 109. I've looked at the way in which we've moved up to begin minor wave five from 105.42 in the last week, and I've extended that by 1618. It probably gets nearer to the 109.95 level actually.
Okay.
So we're going to have a good shunt up for the dollar. Um, I think on the Fed news, yeah, it might pull back a tiny bit. But generally speaking, it's dollar positive
So
going
we're
across New Year.
all right. So here's something that's probably going to have a lot of people wrong-footed.
Hmm.
So, this last rally, this last push up, we're a couple of good days away, although it's quiet this time of year and grinding. That should your scenario in S&Ps work out for, I don't know, it looks like about 20% to the downside. That's going to happen with a backdrop of the dollar heading lower, which is going to surprise people because that's normally they'll look at that as risk on.
Mm.
So, can you see them? Can you see that happening? I mean, that's what your forecasts are calling for, a big break in the market. We're not that far away from a peak in the dollar, and the dollars start to head down, and the market continues down.
Yeah, I mean, the interesting correlation between those is a bit inconsistent. But what we can say is that the dollar will have to have this run up to 109.95. I
Yeah,
mean, that is more interesting when it comes to looking at the 10-year Treasury yield, because at the moment, 10-year Treasury yields, um, I think they're heading back up to the old October 23 highs at
5%.
5%. But the question is, um, how quickly does it happen?
Yeah,
Because in the very short term, ideally, I'd like to see a pullback a bit lower than we had during this decline from November into early December, but I'm not sure we're going to get it. You see, if the 10-year Treasury yields pull back down to 4%, I'm keeping my fingers crossed, because I think that the preceding decline from 450 to 412 was 5 ways. But I'm a little bit nervous about it, because I know that the dollar is going to be heading up. If there were a drop down to 4%, then I think the dollar would just have a minor pullback, and then we continue up. But the relationship between the S&P is a bit more complex than that. It might be that the S&P tops out, and it starts, I mean, it wouldn't interrupt the dollar's flow to the 109.95 area if this suddenly turned down. It's not really going to change anything too much. And this could, the S&P could drop back down to this low at 58.55, and then do a 3-wave rally while the dollar finishes its upswing. Something like that could occur.
Okay. I tell you what, it was great talking to you. I think I covered everything, and I tell you, I get Peter's work. It's excellent. And I think that anyone listening right now should consider it. Peter, how they do it? How they go
Hey,
ahead?
thanks. Yeah, thanks, Dale. Thanks for that opportunity. Well,
thank you for sharing your hard work. You're a mad you're my friend, the mad scientist trader. All right.
Yeah, I've been called a few things in my time.
That's not bad.
That's a new one. Yeah, well, thanks, Dale. No, anybody tuning in today, if you'd like to track what we're doing, you can log into and view our latest analysis with the Elliott Wave Compass report. And we publish twice a week. Generally, it goes out Wednesday night after the close in New York, and also on Friday nights. So you might, depending on which location you're living in, which time zone, you might either sort of grab it sort of Friday night or before you go to bed, and then you've got nightmares, or or you might wake up fresh on Saturday morning and have a look. But it's twice a week. You can generally, this is the main page to Compass. Once you log in, you'll get your credentials to log in, and you can have a look. These are thumbnails, or you can go to the main view online and look at the bigger pictures, or you can select individually. And then you can scroll through a bit like this. So where can you get access to that? Let's have a look. I think that's okay. So this is our wavetrack.com main page, and just go to login. Go to registration, subscriptions here, and here is the Elliott Wave Compass report. So just go through the normal selection process. You can choose the time period you want, and subscribe. Yeah.
Okay. Well, going into the new year, I think it's going to be quite an exciting year in the markets. Do you agree? Peter, did you enjoy trading during Trump's first term?
Well, don't forget we had a bull market really in the stocks, didn't we? We had when just before he was basically the vote came through, the stock market actually sold off because they thought that he was a crazy guy.
Yeah, let it down.
I call Trump the disruptor. Okay. Because I think it's obvious that the mainstream guys running the economy in the background, and the president doesn't really run the economy. He gets his orders fired down from the backroom guys that you never hear about. And Trump is basically a bit of a wild card, and I think I call him the disruptor because I think he's disrupting the status quo of the
everything.
The guys in the background that are really running the show. I mean, don't forget, presidents are either only having 4 or maximum 8-year terms. They don't really have the longevity to implement something meaningful in economic policy, and that's the case with a lot of governments around the world at the moment. But you can notice that it's no coincidence since Trump was basically winning the election, that suddenly we're getting a breakout all around the world of unrest in various different places. I mean, obviously Syria has happened after the the Israeli attack into Gaza, and then the Israelis extend into Lebanon, and then we get Syria, and then suddenly we get this unsettling sort of period in European economic policy and governments switching around in Germany and France, and then you get South Korea bobbling up.
Yeah, it's
And then you
everywhere.
get extra rocket attacks with the Russians sending a sort of a nuclear capable missile into Ukraine as a sort of a test to say, yeah, here we are, guys. And then NATO starts saying, yeah, we've got to spend more on defense, and we can't let the Russians do this and that. So it's a complete mess. And I think Trump is actually disrupting the status flow for the guys in the backroom boys. And maybe there's a chance. Maybe there's a chance that it enables humanity at least to come to peace. I don't know. I'm a bit quirky on my views on this, and I won't necessarily express them online. But I just think it's an opportunity that mankind can reach out and dissolve all of these wars. And I always pray for peace. So let's hope that there's something in that way planned for us. Yeah.
Okay. Uh, a great thing to visualize. And look, whoever was your team, you have to hope for the success of who's in there. Okay.
Yeah.
Yeah. So we're all rooting for him.
Yes. Yes.
Right. The whole world is rooting for him. So anyway, what was it Shakespeare who said, when the coffers are full, the people cry out for democracy, and when they're empty, they cry out for a strong man. So
Well,
it must have happened back then too.
yes, and
Have,
you can go back before Shakespeare and go back to Socrates and start understanding exactly what the difference between democracy and a republic is. I mean, this is
yeah,
also very information if you really want to know and grasp your own freedom. Um, One of the things that I was very impressed with, and anybody listening in, it's just a tip. A guy that I used to respect a lot. I never met him. A guy called Aaron Russo. He actually was he was actually the producer of the film Trading Places. You know,
oh,
the famous film with Eddie
yes,
Murphy and co.
yeah,
But he made a documentary probably over 25 years ago or longer called Freedom to Fascism.
huh,
And if anybody wants to sort of Google that and look at the video, you can find it free to view on YouTube. Gives you a very good insight. And he's also mentioning the way that the Federal Reserve was actually created um, back
oh,
in, I think it was the
Jekyll's
1920s.
Island, yeah,
Yeah.
Jekyll Island, yeah,
And he mentions how the vote was cast when most of the guys in the Senate was on holiday at the time, and they got it through to create the Federal Reserve as a private institution, and who was backing that and who was behind it. It's a very fascinating piece of
yeah,
history. He's unfortunately, Aaron Russo is no longer with us, but he left a good legacy, and that will give you a pretty good idea of where we're at in internals of politics and so on today.
right. I tell you what, great talking to you, Peter, and I hope all your counts manifest to your targets. And peace to you and your family. Merry Christmas, buddy.
Yes, thanks, Dale. I appreciate it. And anybody tuning in, same to everybody. And I can see a couple of people on the chat rooting for peace, and I'm really appreciate that very much. You know, it's really great. Let's hope that we all want the same thing ultimately. We all want to be with our families, being a loving environment with our colleagues and friends.
Yeah,
Nobody wants war. I mean, you get some crazy people who are acting on our supposedly our behalf. Well, they're not acting on mine, and I bet they're not acting on yours either. So
yeah,
let's hope that somehow humanity grasps the opportunity to overcome this, and and bring global peace to everybody. And we share
How,
everything we have.
how about this, Peter? If the S&Ps don't go to 4,900, I'm going to fly to Germany and kick your ass. And peace
Yeah.
be with you.
Yeah, you can do that with pleasure. It would.
Yeah,
I get a hug first, hopefully, and then you
yeah, I
can do
do.
what you like after that.
Anyway, peace to everybody, and profits. Okay, so whatever is happening out there, this is our job to trade price, and
Exactly.
uh, the drama is unfolding outside, but your destiny is unfolding before your eyes, right here on the screen.
Great.
So
Well, God bless you, Dale.
yeah, you too,
Merry Christmas,
Peter.
because I probably won't speak to you before then. And God bless to everybody else. And let's hope that we can have some really great trading success for the coming year.
Yeah, let's reap a bounty, bumper crop next year. So,
Absolutely.
all right, Peter, thank you so much. Peter Goodburn, everybody. And go to his website at wavetrack.com. Check him out. Um, I read him. I would miss not having being able to read Peter's stuff. Okay, everyone, have a great day. Don't just count your waves, count your blessings. See everyone tomorrow. Good luck with the Fed. I'm looking to fade them. We'll see what happens. Adios. And I'm going to gut out Nvidia. I'm not going to worry about it. In fact, I may use this rally to add to my position. And I'll see everyone tomorrow. Good hunting. Adios.
Hey traders, this is Blake Morrow with Forex Analytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.